What up, y'all? My name is Keno Brown. Welcome to the chat. In this quick video, we're going to cover how to get in and out the markets trading futures on TradingView. I'm going to cover a few topics and let's get into the video, man. Before we discuss how we get in and out the markets trading futures on TradingView, we need to discuss the different types of orders we use. So there's three in general, which are market orders, limit orders, and stop orders. Limit orders and stop orders are both pending orders. What pending orders mean is at a specific price, we want to be executed in the market in a certain direction. Well, that's simply put. So let's discuss the simplest order out of all of them, market orders. Market orders is just getting in directly at the price that market gives you. Just right then and there, that's the price you want to get in right then and there. Nothing else, nothing more, nothing less, just right there at the spot price. Limit orders is an order that usually means that you're trying to get a reversal on a trade. So right in this instance, we have a buy limit order. This is a buy limit order. We can see price is starting to trend downwards. We expect at this price is going to reverse in the direction that we want it to go in. So we're going to have our buy limit right here. Once we get tapped in, we expect price to reverse and go buy upwards. In the vice versa, we have a bullish market going upwards and we expect price to go downside. We expect price to go sell side. So at the specific area, we expect price to go sell from whatever area that we want to. But in the specific area right here, we have our order sitting, waiting for price to tap it for it to reverse and go sell side. Now, let's discuss sell stops and buy stops. In this example, we have in this buy stop order, we expect price to continue going in the direction it is already going in. So in this example, we have bullish market and we enter in right here because we want to catch the market going in the direction it is already going. We're not looking for a reversal on a stop order. We're looking for markets to continue going in the direction it goes. That's what I usually use on a day-to-day basis because I'm trying to catch the trend in the direction that the market is already going in. In the inverse of that, we have a sell market right now, a bearish market. So right here, we want to catch the market while it's still going down at this specific price. We want to get executed in a trade for the continuation of the sells. So now we're in the sells and price continues to trend lower to our targets. Now that we got that down pat, let's move to how we enter trades. Let's go. Three specific ways that I use to get into the market. Right here on the left hand side, you have a red and a blue button. The red button means sell, obviously, and the buy button means sell, obviously. If you click the red button, you want to get in, execute it in the market right away. So this is a market order. Boom, you click it, you get directly placed into the market. So I'm going to sell this contract. If you buy, you get buy directly in the market. This is one of the quickest way you can do it. And if you want it exactly that way, where you are market order entries, you can click right here in the settings, right click your mouse pad, go to settings, go to trading. You have the different tabs, go to the trading tab and click instant order placements. When you click instant order placement, you get to execute faster with these buttons right here. If you do not want those instant order placements, you get to go back to the settings, click this off, and now when you press the button here on the left, this pop-up screen shows where you have the market orders, limit orders, and the stop orders, and you get to choose your contract size. Let's call it 5 contracts, our stop loss, and our take profit. So we're gonna have a take profit of 200 and a stop loss of 100 pips or points, which is a 2-to-1 risk to reward ratio. Boom, we pop it open, and as you can see on the screen, we are now in a trade, or we're looking for a trade right now for a 2-to-1. We get out of those. The next way you can get in and out the markets is right here on the right hand side. There's a circle with a plus in it. If you click it, drop down menu comes where you want to buy. You can sell limit, buy stop, or buy sell stop. We only use really buy stops and sell limits or market orders. Just depends on what you're trying to get in. Right here on the right hand side, we have a circle with a plus in it. You click it and you have a drop down menu of a sell limit, a buy stop, or a buy sell stop. We really use only buy stops and buy and sell stops and buy and sell limits, or a market order entry, which is a buy and sell at the market. So you click any one of these depending on which market order, which order type you choose. And the same drop down menu comes from clicking over here. Drop down menu comes and you could click for contracts that take profit and stop loss. And you press enter and boom. You see the trade is exactly how you want it. You can move it around depending on how you want to enter your trade. Maybe you want to enter a trade at the top of the wick and you're selling at the top of the wick. So now you have your sell limit at the top of the wick, which means when price gets back up here, you want to sell going downside. So as soon as price get here, you want to sell downside, and you're wrong at the next wick's high. So that's where you put your stop loss. And let's say you're aiming for the low of the day. Boom. So in this case, this is 3 or 4 to 1 RR, but this is not what we're trying to do right now. To close any trade, all you need to press is the X button, and it's going to say, are you sure you want to cancel the order? And you say yes, and then boom, order canceled on the left side. And my favorite way to get in is clicking right at price, specifically at the price I want to get in. So say I want to get in at the top of the wick for a buy stop. So once price get above this limit, I want to get in right above the wick. I'm going to right click, trade, buy stop, take profit and stop loss. Let's say take profit 300, stop loss 100. We'll fix it to make it more maneuverable. We're going to put a stop loss right under the wick and the take profit at the last previous day high. And it's as simple as that. That's how you would get in and out the trade. But let's say, for instance, you just want a market order entry and you want to get in as quick as possible. So you put instant order placements. On an instant order placement, you will not have the option to put a buy or a sell stop. So you won't have a sell, you won't have a stop loss or a take profit. So in order, if that happens to you, here's the formula. If you're buying, your take profit will be a sell limit and your stop loss will be a sell stop. So you're doing the inverse of buying. You're going to have a sell limit for the take profit and a sell stop for your stop loss. If you're selling, the inverse of that would be buying. So your take profit would be a buy limit and your stop loss will be a buy stop. So let's do it right now. Since I'm selling, let's put my take profit down here, which would be a buy limit, which would be down here. You have to make sure that the contracts are even. If they're not, then you'll probably be partialing out. If that's what you want to do, then it will be perfect. But if that's not what you want to do and you want to get out the whole trade, you got to make sure that you execute exactly the same amount of contract size. So let's put the stop loss. For the stop loss, it's going to be a buy stop. So my stop loss is here and my take profit is down here. If you just want to close the trade outright, you just press this X button. Say you are in profit already. You just draw it down, just much like MT5. You draw down your stop loss and boom. Now you are in profit. You can't lose on this trade. Now you're risk free. If price gets to here and it gets down here and now you're in profit, you draw down your stop loss and now you're risk free. Same thing with your take profit. If you want more pips, just keep going down. Let's say you want to partial out. Let's say you at the target, you don't want to take everything off and you want to keep maybe one contract on. Boom. You keep one contract on here. So it's once it gets here, it's going to take 3 out and it's going to still keep one sell limit contract there. Let's say you want to have another partial out completely down here. We're going to have another buy limit down here. And you could simply just go in, click it, click the contract, 1. So 1 plus 3 equals 4. So your original entry would be 4 sell limit contracts. Your stop loss is in profit. You want to take off 3 at this target and take off the rest at this target. That's essentially how you would do it. Again, if you're buying, your stop loss is going to be a sell stop. If you're selling, your stop loss is going to be a buy stop. If you're buying, your take profit is going to be a sell limit. If you're selling, your stop loss is going to be a buy limit. Hopefully that makes sense. If you have any questions, please let us know and we'll get back to you as soon as possible.